Let's go to the trading floor and find out what the mood is on the floor at the CME Group right now. We have Tim Evans standing by. He's with Longleaf Trading. And Tim, happy Monday to you. How are you?
Hey, I'm doing well. How are you this Monday?
Doing great. Thanks for joining us today. Kind of a downward mood there in all the grain trades so far today. Are there signs that things may perk up or not?
I think it's going to be a little weighty here to begin the week. And what you just touched on, I think, is the right way to begin the discussion, and that's with this dollar firming up. I mean, dollar-denominated assets, especially export markets like U.S. grains, are going to take the brunt of that. We were focusing heavily on war and peace last week with the North Korea situation, and that the emotion behind that was very strong. So the dollar drifted lower on that. But as we're kind of seeing that we're probably not going to be going to war this week, as cooler heads are prevailing, the dollar's caught a bit of a lift, and that's definitely putting this downward pressure on these grains, obviously along with the weather patterns as well.
Well, the grain markets have been weaker since that Globex trade overnight. They really haven't looked back. On the corn, let's take a look. We're still down 2.5 on September, and December new crop corn now at 3.72 would be down 2 3/4 cents on the day. So they really haven't lifted more than maybe a penny and a half off of their earlier lows.
Yeah.
Now, if we look at the soybean trade here on November new crop soybeans, we currently have them trading at 9.33 3/4. And that would be down 11 1/4 cents. Just not much of a sign of life in this soybean trade here this week.
Yeah, I mean, I thought the way that we ended last week was kind of telling, and I think it really is going to help, or has helped set the tone for how we're going to begin, and I'd imagine we'll continue this type of price action over the next couple of days. And that, with the weakness we had toward the end of last week, if you look at the open interest numbers, we saw 15,000 contracts added with weakness. So, the majority of the time that was, hint to or suggest, at least it should, that you're having some emboldened shorts come in and add to that short side trade. So, that's going to create more resistance for any of these snapback rallies if they were to materialize.
What about in the wheat? On Minneapolis wheat, boy, it is just, I guess they would say it's like the whipping post of all the wheat complex here.
Yeah.
And it's been that way for a better part of a week here now. How far can they push that thing down yet?
Our estimates, we think another 35 cents relatively
Really?
easily. I mean, that's actually where our next support level comes in. With the fundamentals shaping up as the way that they are, we think that's actually quite likely. Because we're seeing a lot of supplies out of the Black Sea region. So it's really leaving demand for U.S. wheat. Where is that ultimately going to come from? And we don't see a whole lot of that kind of demand side of the equation changing on a structural basis over the next week. So, we definitely think the trend to the downside is, we think it will continue here early to midweek.
On the Minneapolis futures that we were just showing, over 20 cents lower on the September contract, down 25
scary looking chart.
Yes, at 648.5 is the last trade, and even that, believe it or not, is a dime off of its earlier low of the day. Tim, I'll bring you back here in a little bit, and we will talk about our cattle and hog markets too. Our guest is Tim Evans. We'll have more with Tim right after this. Come on back.
And now we have Jenny in the field talking with Farmer Dave.
Dave, your orchard looks amazing. How is your season shaping up?
Well, I'm using the starting lineup that my agro-liquid coach suggested through my irrigation system. The trees have gained measurable girth. Everything's looking really good. I'm on track to get my fruit to the market a full week ahead of my neighbors.
So you're feeling good about finishing up this season?
Absolutely. Agro-liquid is my championship team.
RFDTV and Mahindra want to salute America's first responders. These are the men and women who are the first line of defense against tragedy in our communities. If you know of a deserving first responder group that could benefit from one of the world's toughest utility vehicles, go to rfdtv.com to register and tell us why they should win. The winning first responder group will receive a Mahindra utility vehicle with Flex Hauler cargo box. Go online and enter for your chance to win.
Well, let's rejoin our conversation with Tim Evans. He is with Longleaf Trading, and he's positioned at the edge of the CME Group trading floor in Chicago. He joins us right now. And I want to run through the cotton market, Tim, and then I'll bring you on. We'll talk a little livestock here, get everybody updated on the cotton price on the December new crop. We're down 63 points right now, and it's quoted at 67.62, only 5 points from our low of the day. Thought you'd be interested in that. We're about 95 points off of our earlier high of the day, so a bit of a turnaround here in the cotton market as well. Okay, Tim, let's talk livestock, let's talk cattle, let's talk live cattle here to begin things. And we're getting a little weaker in the knees here the way we go. The October contract down $1.25 now at 106.15. That's only about a dime or 12 cents off of our low of the day. Well off our earlier high by roughly about $1.80. We have December down $1.05 at 108.28 right now, just a dime from its low of the day. If you look at feeder cattle trade, we have September down 32 at 141.90, October down 8 at 141.52. Any thoughts as to why the feeder cattle are faring better than their live cattle cousins this morning?
Yeah, I mean, I actually think we're going to most likely see some spread differentials in the feeders and the live cattle. I mean, and I think that has more to do anything with with the pace of placements that were done earlier. And where we are in the cycle of that coming to supply to the market. You know, we were a bit oversupplied for a period of time, and we're seeing that reflected in, a lot of the slaughter pace that I was actually going to report today. So it leaves the cycle ready to bring a new batch of cattle into the feedlots.
All right, excuse me, we had our new choice cutout values that just came out at midday from USDA on the beef cutouts. They were up about 20 cents today, priced at $199.80. Selects were up 59 cents, so they narrowed up that spread a little more. That spread is only $3.09 right now. And if you look at the pork carcass cutout values, they were up 22 cents today, priced at $94.66. Belly market, kind of unusual here. We were down about $4.50 on Friday afternoon. They were up $3.66 today, and they were priced at $200.95. So they rebounded, almost gained back almost all they lost last Friday. So this market appears to be very choppy, and we have the August lean hogs going off the board here in just a few minutes, right?
Yeah, that's correct. Yeah, I mean, the thing is with the hogs, I think we're going to see some choppy action. I mean, if we kind of look, past where we are into the fourth quarter, I mean, I think most traders are expecting to see a surge of supply and production into Q4. But right now, I mean, the hog prices are. Let me back up a second. I mean, if you look at the hog and pig data, it's suggesting that slaughter should be about 3 to 4%. And what we were seeing is it's coming in about 1 to 2% higher than what we were last year. So what seems to be bearish actually is kind of supportive for the market currently. So until that changes, I mean, I think there should be a decent base in the market. But I mean, the question I think that's at least is facing us at Longleaf and other traders, this recovery rally that we're getting, does this thing have legs past $70? We don't think so. So I mean, we're using this rally that we're seeing right now in the 68, possibly 69, to use it as an opportunity to sell some premium against the likelihood that we see a dynamic move through 70 cents. We just don't think the fundamentals are going to support that.
Interesting stuff. Thanks for pointing that out. I appreciate it. Tim Evans is with Longleaf Trading, and he is there in Chicago doing a live report for us right from the trading floor. How about that?
All right, yeah.